Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, June the 26th. My name's Eric Wilkinson. Some of you guys may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical market analysis. I'm not here to give you trades, but I am here to teach you how to trade options. It's up to you to implement that in your portfolio in your own way. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on. We don't have a whole lot of economic data to talk about, so let's move on to the overall markets. We've got crude oil moving slightly higher today. Yesterday, really surprising that none of the commodities made a move higher off of the sell-off that we saw in the equities. We did get that bit of a bounce that we were talking about late in the day, but it wasn't quite enough to make it look like we were creating a bottom or that there was any kind of support there. Today we're getting a little bit of a intra-market move that's not giving us any indication as of right now whether or not we found a bottom or it's going to be continuing on in a bearish trend for the foreseeable future. But having said that, crude oil is moving higher today by about 53 cents, but we could call that unchanged for all intents and purposes. The gold continues to fall now that we've gotten below the value area that I talked about. That was going to act as support. Now that that's out of the way, the next spot to stop at is right around that 12,500 for gold. So that would be, or sorry, $1,250 for gold. So that would be the support that we're looking for. Today, kind of building that up. If we come up to unchanged in gold, so another $7 higher, that would actually look like we're kind of building a bottom there as well with the dojis that are kind of being created down there. Bitcoin can't get down to that 5880 area. It's building a nice little area here that we could call a bottom. Longer duration charts will make this look like a bottom because it hasn't come within $200 of that area. Some people will still say that's a tweezer bottom. I think it needs to go down there and at least get the 58 handle anyway for it to really mean something. Just breaking below 6,000 is not going to be anything that's going to scare anybody. Into Dow Jones Industrial Average up about 35 points. Yesterday we talked about it. At one point it was down 500, rallied back 200 late in the day, settled just below the 200-day moving average. We could call it that's acting as support right now because today's action is right in and around that 200-day moving average. So not really a very good chart set up to give any discernible direction. That just didn't rally hard enough at the end of the day for me to say that was creating a bottom. It was just a light volume rally and just lack of participation for the most part. Yesterday I wasn't expecting the NASDAQ to go down and test the 38 Fibonacci level, but it did. Bounced right off of it, maybe pierced below it by a few ticks, but that was that 7,000 mark that we were talking about. That was the real catalyst for the support. It was the psychological level of the 7,000 mark, not so much that Fibonacci, and that's what I was talking about yesterday. Yeah, that Fibonacci is a little bit higher, but the real test is going to be holding 7,000. We were able to do that, so that is a feather in the cap of the bulls, but the way that the market's set up, I think today is just a breather in between a broader market sell-off for at least the next probably week or so. And then we got the mini S&Ps. I have this on a 30-minute chart. It doesn't have the chart set up like my other computer because I'm on location and working from a laptop. I don't have all of the things set up the way I normally do with my home computer, but you get the picture here. Each one of these candles is a 30-minute chart and very quiet throughout the day. This is yesterday's late day rally, and then overnight just everybody trying to sort out what happened the day before. Now the only thing that I'm looking to trade here is Deere. Now you guys may remember that I had on a short in Caterpillar. These two companies, Caterpillar and Deere, albeit they don't produce the same products necessarily, kind of like Coke and Pepsi, they are still in the same sector and have a tendency to move on these sector rotations. Now I played Caterpillar to the downside, just took that off yesterday, so I've been kind of still looking at this area. Was thinking I'd play Caterpillar to the upside, but I'm looking at Deere right now, and I'm looking to sell those 120 puts in Deere. 120, 125. I haven't decided quite yet. 125 obviously is below where the point of control is, so it gives me a little breathing room. The 120s would be really nice, but I'm just not getting enough premium for those below this little support area. So back and forth on that. I'm kind of seeing how the market reacts today, because this inside could really be a continuation down to the point of control here, where the most time and volume has been spent. So that could be an area for a target. So I'd like to at least get below that. So I'm playing around with that today. I'll let you know what I end up doing tomorrow. And that's about it. Thursday's webinar, we're going to be doing it on the strangled. That's a great webinar because it is a very high priority or a high probability strategy for options traders, especially with high implied volatility. So check that out. Go to protraderstrategies.com and sign up for that. That's all I got for you guys today. If you can't take that, take it easy.